Hi, this is Alessio. Hope you're well. In this video, I'm going to show you this data, and I'm going to explain to you why this particular chart that you're seeing here could potentially change everything. In fact, right now, we're seeing a signal that has not happened for 14 years, and it has major implications for the markets, for the stock markets, and also crypto as well. Let me explain to you why. Join me. All right, guys, welcome back. Now listen, before we start, I know what you're probably thinking. If you saw the title of this video, you're probably thinking, oh, here we go again. Alessio is making another bearish video, another doom and gloom video about the stock markets. Now listen, I don't blame you if you're thinking that, because in the last few months, I have published a number of videos which have mentioned strong warnings about the stock markets. For example, in an earlier video, we talked about the Dow theory, how the Dow theory and the Dow Transportation Index has not confirmed the rally in the stock markets. We mentioned how this divergence was an important warning. We also mentioned that hedge funds have piled into the stock market, which is also another warning sign for the markets. And also you may remember this video where we talked about a prediction by Robert Prechter, a very important chart analyst, where he was forecasting a potential bear market for this year in 2021. Now, having said that, as you probably know by now, it is simply not true that I've been bearish in all my videos. In fact, you may recall last year in 2020, I was extremely bullish when the markets crashed. In fact, you may remember when the markets crashed by 34% last year, I was aggressively bullish on the stock markets. In fact, I said this was a once-in-a-generation opportunity to go long on the markets. And by the way, we were right about that. Now, this changes everything. What am I talking about? I'm talking about this chart you're seeing here, this data. This data, by the way, is courtesy of Jason Gebhardt of Sentiment Trader, who, by the way, is a fantastic analyst, and he does some great research on the stock markets. In fact, you'll see here from this data, what Jason says here is this. He says a rare and ugly signal. He says we're seeing a rising probability of a bear market plus deteriorating macro conditions. Jason says the higher the spread, the higher the probability of a bear market, combined with poor macro conditions. He's referring to this chart you're seeing here, by the way. You'll see this blue line, this spread, is now going above the 20% level. By the way, this spread in the blue line is essentially the spread between the bear market probability and the macro index models. In other words, the macroeconomic major trends and economic models. And by the way, according to Jason Gebhardt, the bear market probability model, which has jumped again, this includes these inputs, which are the US unemployment rate, the ISM manufacturing index, the yield curve, the inflation rate, and the PE ratio. And the spread between the bear market probability model and the macro index models, they are now showing to us this blue line, which has now gone above, it's exceeded the 20% level. And in case you're wondering, well, so what? Take a look what happened the last time this happened. This was back in 2007, 14 years ago, when this blue line, when this spread went above 20%. I'm sure I don't have to tell you what happened next. We had then, of course, one of the worst recessions in history, the 2008 recession and the major bear market. We dropped the S&P down by about 50%. And by the way, look at the previous signal back in the year 2000. As I'm sure you know, in the year 2000, when this spread went above 20%, we know what happened next. That was the dot-com crash, the major dot-com bubble which burst, and then we had a major recession that followed. And by the way, every time this spread, again, the spread between the bear market probability and the macro index models, whenever this spread has gone above 20%, we've seen major recessions follow soon afterwards. Again, the years 2007, 2000, 1990, 1980, 1973, 1969. So whenever this spread, this data, has flashed a signal, it's been a potentially bearish sign for the major stock market. And when you think about it, it's actually very exciting, because if you recall my earlier video about a few months ago, we talked about a prediction, a forecast by the chart analyst Robert Prechter, who, again, if you haven't seen that video, go ahead and watch. It's very interesting and fascinating. He essentially used Fibonacci cycles to say that we're likely entering a bear market this year in 2021. Now, this data you see here from Jason Gebhardt is giving us for the first time independent evidence, again, independent corroboration and confirmation that Robert Prechter could potentially be right about his bear market forecast. In other words, based on the bear market probability model that you see here, based on these factors, and when you take into account the spread that you see here on this chart, we now have actual corroboration of Robert Prechter's forecast for a potential bear market. Again, Robert's prediction is based mostly on technicals and Fibonacci cycles, whereas this data is using independent historical models. The bottom line comes down to this. Look, does this chart that you're seeing here, does this signal mean that we're going into a bear market this year in 2021? Is it possible? Yes, it's possible. But is it likely? Is it probable? Personally, for me, no, I don't think so. I think this chart and this data is telling us that a potential bear market and a recession is coming our way, likely sooner than we think. However, I just don't think it's going to happen this year. In other words, I don't think it's likely that we're about to enter a bear market this year in 2021. Now, I am making a video for you, which will be released quite soon, about when I think a potential bear market is going to come and why. We'll explain the reasons for that in a separate video. But all I'm saying is this. Look, this data, this chart you're seeing here, is warning us that a potential bear market and a recession is likely coming. Again, if not this year, potentially in the next few years. For example, if you look at the previous signal was in 2007. We know the major bear market started the year after in 2008. However, the previous signal was in the year 2000. That actually was the beginning of a major bear market and a recession, which began that year. And by the way, we need to remember that a bear market must be confirmed by technicals, by the charts. And the charts have not yet confirmed the bear market. So the bottom line comes down to this. Do I think that we're about to start the bear market this year in 2021? Again, I think it's less likely, less probable. What I think is more likely to happen this year is more like a correction. For example, an 8 to 12% correction or drop in the stock markets between now and December. I personally don't think a bear market will start this year. And again, we'll go into the details on this in a separate video, which we'll talk about. But the bottom line is this. Look, whichever way you look at it, this data from Jason, which is flashing a bear market probabilities rising plus deteriorating market conditions, this is giving us a huge warning that, yeah, things are not looking good and that potentially we are heading towards a major recession or potentially depression and a bear market likely in the next few years. Now listen, I realize that it's potentially bad news, devastating news for a lot of people out there. However, when you think about it, every bear market in history, every recession and depression has also provided opportunities. For example, most recessions and bear markets cause a decline and major drops in house prices. So for example, people out there who are looking to buy a house at much lower prices, well, bear markets and recessions provide that kind of opportunity. And the same thing I think is true for crypto. Now, we don't know yet what crypto or Bitcoin might do in a major recession or a bear market. But I think given the positive correlation we've seen between Bitcoin and the S&P, between the stock market and Bitcoin, I don't think it's good news for crypto and Bitcoin. So I think if this data we're seeing here is warning of a potential bear market and a recession in the next few years, then I think that could potentially be bad news for crypto and Bitcoin as well. Of course, we'll see about that. That is by no means a certainty, it's a probability. But again, historically we've seen that whenever stock prices have dropped, usually that's put downward pressure on Bitcoin and crypto as well. And again, you can argue that's also an opportunity. By the way, before I finish this video, I know some of you are probably going to say to me, Alessio, look, a bear market will never happen in the stock markets. We will never see the market drop. Why? Because the Federal Reserve will always intervene, they will step in and just print more money, and the Fed will never allow the market to collapse into a bear market. Listen, I realize that many people believe in this idea, and it's possible you might believe in this idea as well, that the Federal Reserve will never allow the market to drop or collapse into a bear market. But let me just say this, guys. Just because everyone thinks this idea is true and self-evident does not mean it is true. As you may remember, this is what Jordan Peterson said.
No, you don't get to think, oh, that's self-evident. It's like nothing's self-evident to the skeptic.
Yes, Jordan Peterson is absolutely right. Nothing is self-evident to the skeptic. And just because everyone believes in this idea that the Fed controls everything, that the Fed controls the market, and the plunge protection team will never allow the market to collapse, does not mean it's true. In fact, guys, I'm going to make a video for you very soon, and I'm going to explain to you why this idea that the Federal Reserve controls the market and will never allow the market to crash. I'm going to explain to you why it's false, it's incoherent, and why the evidence is against it. Please be patient with me. I will produce that video for you, and I'll prove to you once and for all why this dogma that everyone believes about the Federal Reserve is fundamentally false. Hey guys, I just want to let you know, I've done a very detailed Elliott wave analysis of the charts of stock markets and Bitcoin in the most recent member video. So if you're not a member, you can join today on that link. Thanks very much indeed. Bye for now.